All right. I think we are good to go. Welcome, everybody. There is 1,000 people here today, and I am very happy to see everybody. I know it filled up really, really fast, overwhelmingly so. And there are already a ton of questions showing up in the box here. Now, I just want to quickly make note, even before we get started, that 1,000 people with 1,000 questions is going to be difficult for me to stay on top of. So if I don't get to your question, you can retype it because on my questions box, the questions kind of scroll up and they do it fairly quickly because there's so many people here. So I'm already asking for forgiveness and saying sorry if I don't get to your question. There's going to be a page that you can leave questions after the webinar. And again, this is Russ Horn for the Forex Power Pro. This is a trading system that I am going to give away for free. And I hope that because it's being given away, that nobody thinks any less of it. This is a honest to goodness trading system. Some of the managers that I work with are using it, and it works really well. It's not a complicated system. It's fairly straightforward. And in this webinar, I'm going to show you sort of the points through an initial PowerPoint presentation. And then after that, the PowerPoint presentation, we get right to actual charts. And I will set up the charts, we'll save a template, and then we'll go through some different examples. And as we kind of go through step by step, what I'm going to do is pause and try to get as many questions as I can in that section, for that section. So the questions generally are going to be related to the Forex Power Pro presentation. And if you have other questions, I will try to get to them. But please, we have 1,000 people here today. And again, this thing filled up really, really quickly. There's a ton of hellos and highs. I want to say hello and hi to everybody. And again, I can't tell you how much I appreciate the huge attendance today. This is awesome. So expect me to deliver. I'm going to give you a trading system that really is worthwhile. And happy Thanksgiving to you, to all our American compadres, fellow traders. November 22nd was Thanksgiving. And I hope everybody had a great one. All right, now that we've got that initials out of the way, let's start with the Forex Power Pro slide presentation. We're going to start with, you can see on the screen here, the introduction, the indicators, the chart setup, entry rules, stop loss, take profit, and some trade examples. So the trade examples are going to be kind of the whole shebang all at once. We're going to go through that. So we're going to go through the entire system on the PowerPoints initially. And then after that, we're going to get right into the charts. So if you have to go somewhere, then after the PowerPoint, you're going to basically have a working knowledge of the system. And I know that there are going to be a lot of people that are here in their off hours. They're either getting up extra early to be here and they are staying up extra late to be here. And again, I can't tell you how much I appreciate that. So the presentation here, the PowerPoint that I've got going, you're going to know the system by the end of the PowerPoint. Afterwards, we're going to review the system, set it up on the charts. So if you need to go, then that would be the perfect time to do it. You're going to have everything you need. And I know I don't want to take up any more of your time as I need to. We're going to slate this for about an hour. That's the plan. And the back room here is going to let me know, kind of keep me updated during the webinar. So there'll be a bit of a countdown. I tend to go over. I try not to. we'll see how this thing goes. There's going to be a lot of comments, a lot of questions, and I will try my very best to get to as many of them as I possibly can. All right. Guys are awesome. All right, let's go on to the first slide. The webinar, Forex Power Pro. There we go. Make things as simple as possible, but not simpler. That is a saying by Albert Einstein, and you have probably heard me say this more than one time if you are familiar with me. I think I've written this in almost every piece of literature that I've written, and I really do put some stock into this. And this really does apply to Forex trading. The Forex markets aren't super simple. They have a nice flow generally, but there's a lot of noise within that flow. So in order to take advantage or take the best advantage, we need some filter mechanisms. So at the same time, we were trying to make the systems as simple as possible. We've got to add an aspect of, I don't want to use the word complexity, but we have to add a filter mechanism. So there's going to be a couple of different moving parts. The Forex Power Pro system is really going to be as simple as I think it can get with the filter mechanism intact. This is a very simple and a very efficient trading system. Now we're going to get right to the indicators and the chart setup. For the entries, we are going to put on our chart a 20 exponential moving average channel. So what this is going to be is we are going to have a 20 exponential moving average applied to the high, not the close like we normally do. This would be applied to the high of the price. We're going to make this a light blue, Dodger blue, and then a 20 exponential moving average applied to the low, the red color. So this is going to give us a channel. Now this is what we're going to use for our entries and our initial stop loss. For a trailing stop loss, because this is huge for me, trade management is so important in not just the systems I do, but any system that you're trading. Trade management should really be a key part of it. And for the trailing stop in this Power Pro system, we're going to use a 10 EMA of the high and a 10 EMA of the low. They are like the EMAs for the entries. This is a little bit quicker channel of the highs and the lows, and it is strictly going to be used to trail our stop loss. Now, this is where the filter comes in. We are going to use a relative strength index, or an RSI. This is going to be a 10-period RSI, and instead of the traditional 50 level, we are going to add two different levels, a 45 and a 55. And to further filter the filter, we're going to add a 10 SMA to the RSI. So it's going to be a moving average of the RSI. Now this is what the chart is going to look like. We've got you can see at the top, we've got the solid blue and the solid red lines in the price chart. That is the 20 EMAs. We are going to use them as our entries and as our initial stop loss. The dotted lines are the 10 EMAs, and they are going to be our trailing stop. Price does like to use both of these as pretty decent areas of support and resistance, so it makes a really logical choice for using them to trail our stop loss with. Price will punch through it occasionally, but not very far, and you can see many examples here where that is the case. So having our stop loss just a few pips above or below is ideal. But it mentions we'll trail it. We'll trail it close to price, and we get our stop loss from our initial stop towards our entry almost immediately. And for me, that is really a big thing. Yes, I am going to show you how to apply these on the charts. And do I also use the fixed take profit? I do, and we will get into that. I'm reading the questions as we go as best as I can. So a buy trade. This is how we're going to get into a buy trade. Price closes above the blue 20 EMA of the highs. RSI is above the 55 line, which will be the top dotted line on the RSI indicator, and also be above the 10 SMA on the RSI. This is an example of a buy trade. We can see arrow number 1 is the close of a candle above the 20 EMA of the highs, which is the solid blue line. We get that close, and now we're going to look to the RSI. Is the RSI above the top dotted line, which is the 55 level? If it is, we've got the second part of the entry complete. And finally, the third part, we're looking for the RSI to also be above the 10 SMA, which is the red moving average. And in this case, we have all the requirements, so we are good to take a long trade here. How simple is that? It's really quite simple, isn't it? Now, a sell trade, it's exactly the same as a buy trade, just all opposite. A price closes below the red 20 EMA of the lows. RSI drops below the 45 line, which is the bottom dotted line. RSI is below the 10 SMA on the RSI indicator. Here is an example of a sell trade. You can see number 1, where the arrow is. Number 1, the price closes below the red 20 exponential moving average. So when we see this, we look next to the RSI. Is the blue part of the RSI, the actual RSI line, below the 45 level, which is the bottom line? Off to the right-hand side of the RSI window, you can see I've circled the 45 level in red. That is the bottom 45 line. RSI drops below this. And is the RSI below the red signal line? If yes, then we are good to hit a sell trade. Which one is the RSI line? The RSI is the blue line in the bottom window. So we've got an RSI of 10 period. It's the one that's got all the little straight lines. It looks very rickety and zigzaggedy. And the moving average of the RSI is the red, smoother looking line. And the 55 level and the 45 level, generally the RSI has a 50 level, a line that goes right through the middle of it. But on this one, we have broken that down into a 45 and a 55. I found that the 55 level is very, very choppy, and you can't rely on a signal crossing the 55. And I'll show you some examples of this on the live chart, why we don't want to use the 50, but instead the 45 and the 55. Once the RSI crosses either the 45 or the 55, we have a level of commitment there that we don't see when it crosses the 50 line. So this makes it a much more effective way to use the RSI. So now we are going to look at our stop loss. When we are placing a buy trade, we want the market to go up. The initial stop loss will be a few pips under the red 20 EMA of the lows. That's the solid lines. And here we have the initial stop loss is a few pips under the red 20 EMA of the low. We can see that this was the previous example of the buy trade. We don't need the RSI because we know at this point it's triggered the long trade. So what we have here is you can see the entry candle directly underneath the entry candle. The entry candle is the candle that closes above the 20 EMA of the highs, triggers the trade. And directly below that candle, we're looking to the 20 EMA of the lows. And the stop loss, I don't want to put right on the 20 EMA. I like to give it a little bit of space underneath, just below. The trailing stop loss, we're going to move the stop loss along the blue 10 EMA of the lows, and that is the dotted line. As every new candle forms and closes, we can then move our stop loss. We can inch it towards the entry and then hopefully into profit. This almost immediately means we can start to reduce the risk on our trades, and that is a big deal when you're trading. The stop loss for a sell trade. The initial stop loss. The initial stop loss means this is the stop loss that you place when you enter the trade. It is the stop loss that's going to be the furthest away from the entry. The initial stop loss, we can see on a sell trade, will go above the blue 20 EMA of the highs. Here in the example, we have the candle closing below the red line, the 20 EMA of the lows. We know the RSI is signaling a short, so we don't need to look at that in this example. This is the previous picture. So above that entry candle, we're going to look at the blue 20 EMA of the highs and place our stop loss just above that. The nice thing with this trading system is we don't need to place a stop loss quite above the swing highs of the market. And there is quite a huge advantage to doing it this way. And I'll get into that in a little bit. The trailing stop, again, we will now use the 10 EMA of the highs, which will be the red dotted line. And every time a new candle forms, we're going to be able to move our stop loss along that dotted line. And again, almost immediately, we're going to be able to start moving our stop loss towards our entry. And as soon as we can start doing that, the sooner we reduce the risk on our trades. And again, I am not going to stop saying that. It's hugely important that it's a necessity. We really do need to do that. All right, I've got questions I will try to get to. Do we move the stop loss every candle? You don't have to move it every candle. I prefer if we do, but it's not important that we do. If you want to move it every other candle or so, then that's okay too. But if you want to go strictly by the rules, then moving it every candle would be ideal, just in case something happens. You're not going to be able to move it a real huge amount every time, but inching it, 1 pip counts. Like every pip will make a difference. So 1 pip really does help reduce the risk. So if you can do it every candle, that would be ideal. Another question is, do the entry candles always have to close? Yes, they do. We're going to see a lot of examples where price can punch through these levels, but not close past them. And if you get into a trade based on simply having price movement past them, that could end up being bad. You could end up losing the trade. And this is just the highest probability. When you have a close of a candle, you have the suggestion of price momentum. And that is what we really want to take advantage of, is the fact that price wants to keep going in that way. Question is, why do we have the red line on the RSI? It is a filter of the filter. We're filtering the RSI a little bit. I'll get into that a little bit more when we actually go to the live charts. Can you show me how to apply the moving average on the RSI? Absolutely. I'm going to set up the charts from scratch. I'm going to show you exactly how to do it. A lot of the traders that I deal with don't know how to apply an indicator to an indicator. So this is going to be a kind of a neat lesson for everybody. All right, let's get on to the next slide. The take profit level. We are going to initially go for a 1-to-1 take profit. We can see in this buy trade, a 1-to-1 take profit. What that means is whatever we're risking on the trade is what we're going for. So here we can see the yellow horizontal line is our entry, and we can see where the entry candle is. The initial stop loss goes just below the 20 EMA of the lows. And in this example, it's 25 pips away. So where we enter, where the stop loss is, that distance, 25 pips, means we are going for 25 pip take a profit, 1-to-1. Now, this doesn't seem like it's the best way to go right off the bat, 1-to-1. Everybody likes that 2-to-1 or the 3-to-1 or whatever that kind of ratio is. Today's market makes it difficult to get those higher ratios. So to start out with, the 1-to-1 is the safest. Once we get the cross past the line, we know we've got a little bit of momentum in that direction. And generally, it's the momentum that'll carry us through to hit our take profit. And we will win quite often. We can use a 2-to-1, and I will get into that. I'll show you how to do it. But for now, as you're starting out, do the test with the 1-to-1. It's the safest. Again, as price starts to move, we can start to move our stop loss. And as we start to move our stop loss, that reduces the risk almost immediately, which means when we lose a trade, even though it's a 1-to-1 risk reward, we very rarely are going to lose the full one. it'll be 75% or 50% or 25%. It'll be less than the full one. We're always going to get the one target, but we're never going to always take the one stop loss. So when you look at it this way, the risk reward is shifted in favor of the reward. All right, let's go on to the next slide. Thank you very much. I'm getting some compliments already on the system. Yeah, as the system is being kind of unfolded, you can, some of you are already applying these to your charts and you're seeing how this thing works. And it is simple, isn't it? It's awesome. Now, we're going to take a look at a sell trade with a take profit. Now, this again is the one-to-one. We've got the entry candle. We can see the arrow pointing to the entry candle. We look straight above the entry candle to the 20 EMA of the highs. We place our stop loss a little bit above it. What is the risk at this point? In this example, it's 40 pips. So what we're going to do is take profit at 40 pips in profit. It's really that simple. Now, as soon as price starts to move towards our take profit level, then we can inch our stop loss closer and closer to the entry. So again, we're very rarely going to take the full one hit. If we lose the trade, we can lose maybe 75%, 50%, maybe less. We're very rarely going to lose the full 100% that we risked. Now here is a buy trade examples. Please show more examples. I absolutely will. Again, this is just the PowerPoint version of the webinar. We are going to do a live version, and we can go through some real fine details with the actual charts. What time frames should we trade? I prefer that you start with the 1 hour and the 4 hour, something higher. During the right times of days, the 15-minute, the 5-minute can be very profitable, but in the wrong time of day, it can be very choppy and very difficult to trade. So start with something that flows a little bit better. The 1 hour and the 4 hour and the daily, they're really good to learn the system. All right, I'm going to get to some of those questions again, but let me cover the actual trade example here. This is the buy trade. We can see number one, the first arrow there. That's where we enter. Price goes underneath the 20 EMA of the lows, which is the solid red line, as the entry is triggered by a close above the solid blue line, the 20 EMA of the highs. The RSI moves above the 55 level, and the RSI is also above the simple moving average, the red line. We're good for a long trade. We figure out that the stop loss is, say, 35 pips on this one. Take profit goes 35 pips away from the entry. Now, as price starts to move, we can start to trail our stop loss. So no matter what happens, we're almost never going to get taken out at the full amount that we risk. It's really simple, and you can see already a different, just on this one slide. Now, there's other trades, and you can see that even the other trades are working out, even though we're not focused on them. A sell trade example. Here we go. We have number one, we get the close below the 20 exponential moving average of the lows. So next we look to the RSI. It is below the 45 level. Cool. Next we look to see is the RSI below the moving average. Is the blue line below the red? Yes, we're good to go short. So we enter at the close of that candle or the open of the next. It'll be the same price. And then from there, even before we enter, we want to make note of where our stop loss is going to go. Is arrow number 4. Then we can enter the trade. At that point, we place a take profit, the same distance as our stop loss. So in this case, let's say it's 55 pips. We have a 55 pip stop loss, meaning we've got a 55 pip take profit level. And as market starts to move, we almost immediately start to move our stop loss closer and closer to our entry level. Very nice trade, very clean, very easy, very simple, but very effective. So let's get to the charts. All right. Let me read through some of these questions. Yeah, it is pretty cool, eh? We've got some advanced traders here, judging by some of the questions. How would we use the multiple time frames? There are ways to do that. I will try to get to that as well. Before I get into the multiple time frame thing, I'm going to set up a chart. We're going to save a template. We're going to look at some trades based on that. We can look at some re-entries with the trend. So this system is great for counter trend and trend trading. And I will identify the lines for you. We're at the phase now where we can take the chart, set up the chart, and as I do that, I'm going to describe exactly what I'm doing. You'll see what I'm doing. You can follow along if you want as well, and you'll know exactly what I'm doing. And the cool part is I'll show you how to put an indicator on the RSI. All right, so let's start with the moving averages, the highs and the lows. And these are going to form our entry channels and our trailing stop channels. Very cool. So there's a few different ways to add an indicator to the MetaTrader 4. So I'm going to start with this icon right here. We can go with this one. We can go with the navigator. We can go with insert indicators. But we'll start with the indicators tab, the indicators button. Moving average, I've got mine on the top here because I've used it lately. If it's not on yours, you go to trend, find moving averages. Now these are going to be in order alphabetically. So your moving average is probably closer to the bottom. So moving average, I'm going to go 20, shift 0, method exponential, apply to the high. I'm going to make this one Dodger blue. And the thickness, I'm going to put on the second. So it's the second thickness. Hit OK. This is the moving average of the highs. Now, before I even do that, what I should be doing is looking at the chart itself. I'm getting too ahead of myself. I just want to dive into the system. So let me remove that. Go right click on it, delete indicator. I'm going to magnify. This is the default when you open up a new chart. When you open up a chart, this is the default window here. So at this point, I'm going to click candlestick. We'll zoom in using the magnifying glass. Right click anywhere on the chart, hit properties or F8. Colors. I'm going to keep the background black, the background. Keep the foreground white. The grid I'm going to take off, but the grid color is going to be the current price line color as well. So if you don't like it, the color it is, we can change that. Bar up is the shadows and the outline. Bar up for me is going to be white. Bar down, shadows and outline is going to be gray. Bull candle, white, that's the fill. And you can see in this window here, as I make the changes, it is presented in this little candle, in this window here. Bear candle, I make gray. Line graph volumes, ask line, stop levels, I can leave them as they are. Hit OK. Right click. Grid, I can turn the grid off just by clicking this. So this becomes my basic black chart. Now I could save this as a template, which I'll do right now. Template button, save template. I'll call it basic black. Now I've got it saved as basic black already, but I'll save it again. Save. Yes, I want to replace it. Now when I open up a new chart, I can apply the basic black. This is going to be for a new trading system. If I want to add new indicators, something that I haven't done before, we'll go from here. If I like this setup, now to add the indicators. Awesome. About time, eh? Okay, let's get to the indicators. The indicator button, moving average. Now that I've already clicked the moving average, it's going to appear right at the top because it's the one that I used most recently. If yours is not, find it in the trend. Yours would be a little bit lower if you haven't used it recently. Moving average, 20 period, exponential of the high. I make the line thickness 2, Dodger blue, OK. Do it again. Moving average, 20 exponential of the low. And I'll make this one red. Now what we've got at this point is our entry and initial stop loss channel. The platform that I'm using is MetaTrader 4. I use this for almost everything. And you should be able to set up your charts like this using other platforms. But MetaTrader 4 is free. A lot of traders don't want to spend money if they don't have to. And that's absolutely, when you're getting started, that's the way to go. They work. I mean, there's no reason for me to use anything different. Absolutely, you could use any broker, any platform. So I've got the entry channel. Now we're going to go moving average, 10 periods, exponential, low, but the low in this one is going to be Dodger Blue. Make the line the thinnest line. That will activate the different dots, dashed, whatever the case is. I'm going to use the dot. That is the 10 exponential of the low, moving average, 10 exponential of the high. Make that red. And there we go. We've got our entry and we've got our trailing stop moving averages. Next, we're going to add the relative strength index, or the RSI. So we're going to find that in oscillators. Relative strength index for me is fairly high. Again, this is going to be initially in alphabetical order, so you might find yours down towards the bottom. Relative strength index, 10 periods. Apply to the close. I make mine Dodger Blue. Again, the line thickness is 2. Levels. Let me delete these so that I can add them. Levels, I want to add. Hit 45. Add. 55. The levels for me are going to be white with a dotted line. Okay. So here, now we've got the RSI. What we want to do finally is add the simple moving average to the RSI line. And we can only do that through our navigator window. So at this point, we're going to have the indicators button. From there, we go to moving average, drag and drop onto the RSI. Don't drop it into the price chart, drop it onto the RSI. Up comes the properties box. I'm going to go 10 period, but I'm going to make this one simple. And this is very important. Apply to previous indicators data. If you apply to the high, the close, the low, whatever the case is, it'll apply it to the price chart. You want the previous indicators data. I'm going to make this a solid line. Keep it red. Okay. There we have the 10 SMA on the chart on the RSI. So at this point, I am going to save this as my Forex Power Pro template so that I don't need to go through this whole process every single time. Templates, save templates. I'm going to call it Forex Power Pro. Save. Now, when I open a new chart, this is the default chart. Templates, Forex Power Pro. It saves the size, saves the fact it's candles, like the magnification, saves the colors, saves the indicators. Everything that you've done is going to be applied to the chart. So this now is the Forex Power Pro system. Have you guys got any questions about building the charts? Yep, it is MetaTrader 4. That seems to be kind of what the questions are. MetaTrader 4. And you can get that from almost every broker. If you are not sure where to get it, you can go to metatrader4.com and download the free one there. The indicators, again, sure, I'll go really quick. The solid lines, the solid blue line is the 20 EMA of the high. Yeah, the exponential moving average. The red one is the 20 EMA of the lows. The red dotted line, the 10 EMA of the highs. The blue dotted line, the 10 EMA of the lows. Now, not of the close like we usually do, but this is of the highs and of the lows, and they form a price channel. The blue line down here is the RSI set at 10 periods, and it has added to it a 10 simple moving average, not an EMA, but an SMA. And the 55 and the 45 levels. That's a great question. What I have found over the time I've been trading is generally traders will use a 50 level, which is right in the middle on their RSIs. But the 50 levels can be a little bit misleading. Now, if I throw a 50 level onto the chart, we can see here the green, the 50 level, price crosses, but then crosses back. Price crosses, but then crosses back. When we see that a lot, price crosses and then crosses back. Price crosses, then crosses back. So the 50 level acts kind of like an area of consolidation or resting or pausing. And that's what this 20 EMA channel is like as well. The price at these levels are resting, pausing, kind of like home base. You see an example in here. Price gets into the channel and it doesn't mind staying there for a while. It rests, it consolidates. And you'll see it here. You'll see a little bit sideways going in here. The channel becomes sort of home base. And then once we get a breakout of the channel, then we have a little bit of momentum, some commitment. The same goes with the 45 and the 55 levels. Once we get the RSI to break through and move past either 55 or 45, you'll notice that there's some commitment to it here. Once we get a close above or move above the 55, it keeps going. Move below the 45, it keeps dropping. Again, above the 55, keeps going. And we're in between here is what I call the neutral zone, because it's really a neutral area. There's a lot of chop inside of that zone. But when you get a close below or a close above, you get sort of a commitment to continue. And that's the modification that I've changed. I don't think I've seen any other traders doing it quite that way. I'm sure it's being done by a few, but over the years, I've decided this really is a good way to go. It makes a lot of sense. And when you do get the signals to go, they are a lot more accurate. All right. Any more questions about the setup? All right. I appreciate that you're here. The question is, will this be recorded? This absolutely is being recorded. It's being recorded by me. I'm personally recording it, and it's being recorded by a couple other staff members. And it's going to be uploaded as soon as the recording is published or whatever. So as soon as it's ready to go, we'll have it uploaded. So don't worry about missing any of this. I appreciate that you took some time with me here to learn the system, and try it out when you get back from work. Absolutely. You are so very welcome. And again, I appreciate the fact that you made it in. All right, let's take a look at some buy and some sell trades. We're in a nice little neck of the woods here. So what I'm going to do is I'm seeing there is, we'll get to that in a minute. I'm going to show you something that most traders will not show you. All right, let's take a look. What we're going to look for, the first thing we can do, we can break this down into steps, A, B, C. First thing that we can look for. Now, instead of having to look at all the stuff, all the different indicators and try to figure out buy, sell, whatever, we look at one. We look at this 20 EMA price channel. 20 EMA at the highs, 20 EMA at the lows. You get a close below the 20 EMA of the low. The next thing you want to do is take a look at the RSI. Is the RSI below the 45 level? Now let's draw a line on the chart here. Got a vertical line. This is the candle that closed. We were watching it get built. Finally it closed. All right, now it's closed below. At that point, was the RSI below the bottom level here? The 45. Yes, it was. And finally, was the RSI below its red signal line? And in this case, it absolutely was. We are clear to go short. Now let's draw a line at the entry. So it'll be either the close of this candle and the open. I mean, they both happen at the same time. Once the candle closes, the next candle opens. So this is the price where we get in. We're looking at an entry here. Next, stop loss. Where does the stop loss goes? It goes just above the 20 EMA of the highs of this signal candle or the entry candle, right above here. So let's draw a line there. Now, I like to see a bit of a gap in here. Now, this is the gap that I have, and I'm comfortable with that space. That's the space between my stop loss and the actual line itself. If you are uncertain of a gap, you don't know how far you want to go, if you want to make it really huge or too small, you can put it just on the line if you like. It's not often price will retrace immediately to that level, but I do prefer a little bit of a gap. Now, once you've got your stop loss figured out, we'll take a look at what the distance is. In this case, we're looking at 23 pips. And on my crosshairs, that's the second set of numbers. It says 230. I'm using a 5-digit broker, so that means 23.0 pips. So if that's the case, we are going to place a take profit 23.0 pips in the trade here. So 23 pips into profit. So we've got our take profit, we've got our stop loss, we've got our entry. We're in the market. Price starts to move. As it does, we can see that the 10 EMA of the highs is the red dotted line, starts to move as well. So almost immediately, we get to start moving our stop loss. So for every new candle, we get to move our stop loss. And finally, price takes us out. This level here, stop loss has already been cut in half, but we're taken out in profit. Trades closed. It was great. We reduced the risk almost immediately on the very next candle. So even if we did lose, then we would not have lost the whole amount. Is there a max stop loss? No, I don't think so. Your stop loss is going to change depending on the time frame you're looking at. If you're looking at a 5-minute chart, your stop loss might be 6 or 7 pips away. If you're looking at a 4-hour chart, it might be 50 pips away. What I want to do is stay away from abnormally big candles. But for a max stop loss, if you have a preference, if you don't want to go over a certain stop loss, then that's cool. But no, there's not really a max stop loss. If you get a trigger, you calculate the stop loss, you'll be aiming for that in profit. And more often than not, you're going to get it. All right. Is there any questions about this particular trade? No, we're good. Okay, it's pretty straightforward. Now we'll take a look at a buy trade. Comment is that I have quite a lot of currency pairs. I do. I look at 10 different currency pairs. Start at the euro pound and they go through to the US dollar Japanese yen. These last couple pairs are just sort of what I'm using for the chart examples here. I don't look at all, well, I do. I look at all 10 currency pairs, but I don't trade all 10. I trade the Australian dollar, US dollar. I like that one a lot. The Australian pairs are pretty good. The euro pairs, they're pretty good as well. Euro USD, Australian USD, those are some of the best pairs to start with. And the smaller the time frame you go, the more you want to focus on those currency pairs. The different currency pairs get extremely choppy the smaller the time frame you go. They start to smooth out the higher you go, the 1 hour, the 4 hour. The best time frame, what's the best time frame? Would, for me, be 1 hour or 4 hour or the day. Now, there's not a whole lot going on in the day. You have to wait for days, sometimes a week before anything happens. And if you want to get a little more action, then trading the 1 hour or the 4 hour is really going to suit you best. So let's get rid of these lines and take a look at a long trade. All right, the questions are fast and furious, and I'm trying to kind of pick out the ones that are most relevant to what we're talking about at the time. So if I skip over you, I do apologize. And even if it is relevant, it might have come and gone in the broker. There's 1,000 people here, and it is really just like a scroll chart. It's just the questions are just boink, 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 boink. So let's take a look at a buy trade. Here, there's a couple. We've got one here. We've got one here. So let's go with the one. Oh, well, it doesn't matter. Let's go with this one here. Got a buy trade. At this point, what we're doing now is we're looking for a close above the 20 EMA of the highs. We get that right here. So let's go and take a look at the rest. Now that we see that there's a close above the 20 EMA of the highs, we take a look and see the RSI. Is the RSI above the 55 level? And at this point, it is above the 55. It's not hugely above it, but there is a gap. You can see that there is a little bit of black space in there. So we do have 55 moving above, or sorry, the RSI moving above the 55. And then finally, you want to see, does the RSI, is it above the red 10 SMA? And in this case, it is. So we've got the requirements all met for a long trade. So the long trade, we will be looking at getting in on the close of this candle, open of the next one. Stop loss goes underneath the 20 EMA of the lows of that entry candle. So we'll go here. Again, the gap preference will be different for some people. If you're really uncertain about that gap, you can get fairly close to the 20 EMA of the lows. I do prefer to see a little bit of a gap. We're good to go. Now calculate, use your crosshairs. What is the distance? In this case, it's 18 pips between the entry and the stop loss. So we're going to look for 18 pips into profit. And on this one, it's up. It's just about the top of that one candle. So we've got our entry, our stop loss, and our take profit. Now this one hit almost immediately, but let's say it didn't hit right away. We would start moving our stop loss up along this 10 EMA. Now, as you notice, the very next candle, even though it's not a big candle, the 10 EMA has started to move up already. So as the 10 EMA goes, we start to move our stop loss along the 10 EMA as price rises, almost immediately reducing the risk on the trade. Sorry, I'm talking and chart looking and question reading all at the same time. Do I exit early? There are going to be times where you might want to consider an early exit. Let me get rid of the lines on the chart here. Objects list. And there are a good indication of an early exit would be when the RSI crosses the 10 SMA in the wrong direction. So in this long trade, say we entered on the trade here, price is moving up, but here we see we get a nice clear cross down below of the RSI below the 10 SMA. We might want to consider getting out at that time. When that happens, price starts to move sideways a little bit. Of course, that's not, in this example here, price moves really nice. And we get quite a nice run. And then when we finally get the crossover, price does pull back. It doesn't stop us out if we were following with the 10 EMAs at the high. But, I mean, we don't know that as we go. We don't know that price is going to continue. So we have to kind of pay attention to what our indicators, what our system's telling us. It could very well have continued to move up. The moving average on the RSI does not need to interact with the 45 and the 55 levels. Doesn't matter where the moving average is, the red line, as long as the RSI is either above or below the red line. That is really all we're looking for. The direction of the RSI. Now, I'm guessing what you mean is, the question is, do I have to pay attention to the direction of the RSI? And I'm guessing it means these little hiccups in here. No, what happens is you are going to get little pullbacks as the price moves. You're going to get market moving in the opposite direction, one candle, two candles at a time. And every time that happens, the RSI is going to reflect that with a little kind of hiccup, a little node, a little move in the opposite direction. As long as it's below or above the simple moving average, that's really all we need to pay attention to. Now, there's a couple of different aspects. We got a long trade, we got a short trade. Is there another aspect? We've got some different things that we can talk about. 2-to-1 ratio. Let's do that. Let's look at the 2-to-1 ratio. Now, I mentioned earlier that this system has an advantage, and that 20 EMA channel is a huge advantage. Now, what this does is it means, let's take a look at this long trade down here. We have this long trade on this candle. Traditionally, what a trader wants to do is put your stop loss below that swing low. Now, the reason for that is technical trend, like a trend in the purest definition is lower highs, lower lows in a downtrend, higher highs, higher lows in an uptrend. It just means it zigzags upwards. Now, if you place your stop loss, in this case below, we're expecting the trend to go up. So if the trend goes up, this low should never get touched. As price zigzags its way up, this low should be the lowest low. Any low after that should be higher. With this trading system, we get to chop that down, sometimes in half. This one's probably not quite half, but it's pretty close based on the moving average. Now, what that does is that reduces the amount of pips between your entry and your stop loss, which means you can add a little bit more to the lot size if you want. You can risk a certain amount. But what's huge here is it reduces the number of pips that your stop loss is, which means the 1-to-1 ratio doesn't have to hit as many pips, which again means it's easier for the market to hit a 2-to-1 risk reward ratio. So let's say here I think we were looking at 18 pips. So there's an 18 pip stop loss on this. Now, as the market moves, so do we get 36 out of this? We almost get 36. We get 35.4. Well, that's cool. I mean, this is actually a brilliant example. So let's go take a look at this. This is what we're going to use as trade management. I mean, this is killer. So the way I do the 2-to-1 is we will have a 1-to-1 and we'll have a 2-to-1 level on the chart. When price hits the 1-to-1, I like to move my stop loss to break even. First, as price is moving, I will be trailing it with the 10 EMA. But as soon as price gets to that 1-to-1 level, my stop loss is going to get moved to break even. It's going to jump the line, as it were. It's going to jump ahead of the 10 EMA to break even. And what's happening at that point is I'm in a risk-free trade. I am free now to go for that 2-to-1. As the 10 EMA crosses above my entry, where my stop loss is, I can then start to move my stop loss into profit until I either hit my take profit or get stopped out. And in this case, I get stopped out at almost the 1-to-1, a little bit shy, but it was a valiant attempt at the 2-to-1. But we can see many examples where the 2-to-1 gets hit. We have a 2-to-1 here. Now we can go very, very easily just by looking at where's the entry, where is the stop loss, 23. We'll double that, 46. So we get 46 on this trade. Here, the entry, stop loss, 17. So we're looking for 34. So we get 34 on this trade. And I mean, they're all over the place. This one drops right down. So we're doing good. Like, you really can do well with a 2-to-1 risk reward ratio on this. Now, What I wanted to show you, again, I mentioned earlier, not many traders will show you this. And don't look bad on me for showing this to you, but you have to see it. What you want to see, yeah, the 4 hour is great. This is the 1 hour time frame. The 4 hour is good. The higher time frames are awesome. They work really nice. What I'm going to show you, because you are going to come across this, is a losing trade. There's one right here. We get the signal and it takes us out. I'm going to show you how we go about handling this losing trade. As much as I'd like to tell you that this system is the holy grail, I mean, it's a good system, but you're not going to win every trade. It's important, I think, that you check this out, that you see that this is a loser and how we handle this. So we'll go through the process. We've got the one candle here. This is our entry candle. It meets all the criteria. It's a good entry candle. Price is dropping off. Get a close below the 20 EMA. RSI drops below the 45 level here. It's below the 10 SMA. It's a good signal. I would take this. What happens is, put my stop loss. Price does not move. It doesn't go anywhere. It goes sideways and eventually changes its mind and it goes in the other direction. Now we get a signal to go long later on, but that doesn't do us any good here. What happens is we're in a trade and it's not working out. What is going to happen though is as price starts to move, we start to move our stop loss and we do get taken out. We don't get taken out at the full 1-to-1. We do get taken out probably, I'd say about 80%. I mean, that is one of the few times where you're just going to get nailed on the trade. And it happens. It really is going to happen from time to time. And it is no fault of the trader. It's no fault of the trading system. The market today is very volatile. Seeing this losing trade, it's important that I show it to you. I don't want to present a trading system to you and have it, I don't want to hide this kind of thing from you. I mean, it's as important as the winning trades. How you handle your losers might even be more important. If you guys are cool with that, yeah, and then we have a big winner after though. Absolutely. And that's a 2-to-1 winner if that's how you wanted to play it. Or you would get your, if you did the 1-to-1, you would still have made money because the 1-to-1 risk reward on the loss wasn't 1-to-1. You started to move the stop loss towards the entry. So when you did get taken out, it wasn't for the full amount. So the next trade, even if you were going the 1-to-1, you would have made money because you got the full 1 reward. But you didn't take the full 1 hit loss on the previous trade. I am glad. It's always a little nerve-wracking for me. I like, it's so important to me that I show this aspect to you, the losers as well as the winners. But I know some people are a little, they don't want to see that. They call it rose-colored glasses. And if that's how you approach trading, it's going to be tough because the losses are going to happen and you have to be wide-eyed with them. Like you really do have to see what's going on. You have to manage it. Once the loss happens, you cannot take it personally. The market doesn't care about you. It doesn't care about your trade. It doesn't care about your position. It doesn't care about your status. I mean, none of that stuff. It's not out to get you. It's just doing what it does. I mean, it's doing its thing. You're doing your thing. And sometimes they don't agree. Do I trade this in a particular time? Is that like a particular time frame or during a particular time of day? Well, let me answer both. I prefer to trade this one, either the 1 hour or the 4 hour, and I can trade it throughout the week. If I'm trading a smaller time frame, like the 15-minute or so, I want to stick to the London session. The London session, the market moves really well. The London session goes half into the New York session. But once London closes, which is lunchtime, New York. That leaves the New York players kind of all by themselves. So there's not a whole lot of money changing hands. And that's what we need for the markets to move, is just that movement of money. So during the London session, London, Great Britain, trading with Europe, trading with Tokyo, trading with Sydney, there's market movement. US comes into the picture kind of around lunchtime for London. Then there's another player in the game. So there's more money moving around. But during this time, Tokyo, Sydney, they're going to sleep. So finally, when London closes, US is kind of there by themselves. Everybody else is asleep. Not a whole lot of money moving hands. Market slows down. So I like to focus the smaller time frames just in the London session. Okay, I am over the limit. We just hit an hour. And there's little binging and lights and flashing telling me that we've hit the hour. And I will answer a couple more questions. I'll spend a little bit of time here. If I could, I would spend the rest of the day with you guys. But we've got a limit, and I promised I tried not to go over an hour here. I know your time is extremely valuable, and I appreciate that 1,000 people showed up today. You can leave a question or a comment on the Facebook page. There's facebook.com/rapid results method. Yeah, if there's any questions regarding this system, I will absolutely do my best to answer them. How many hours do I trade in a day? My time seems to be more and more valuable. So I don't like to spend as much time trading as I used to. I used to be in front of the computer all the time. So now what I'm doing is during the London session, I'm trading a little bit smaller time frame, and I'm just looking for 1 or 2 trades. And if I can get the first one off the bat, then I'll be done for the day. I just want to get in, get out. And with the system like this, on a little bit smaller time frame, they're all the time. Like the trades happen quite frequently. So I'm not waiting for very long. Oh, and yeah, there's the Facebook page. There's also, you can leave a question or a comment on the rapidresultsmethod.com. There's a comment section on the main page. Go there, leave a question, leave a comment. Webinar is recorded, so you can refer to it later on as well. We'll have that recording up for you as fast as we can. How many signals do I get per day? Well, that's going to depend on the time frame. If we are trading something smaller, you could get 2 or 3 during your specific trading session. If you're trading a larger time frame, hour, 4 hours, something like that, you might be getting 1 a day. The 4 hour, you might be getting 1 every couple of days. And then on a 4 hour chart, 6 candles make up a day. But then if you're looking at different currency pairs, I mean, that all kind of comes into the equation. I can see a lot of people are leaving. They have to go and they're saying goodbyes. I appreciate that you're here. Thank you very much. And I really have a good time doing this. The specific pairs, I like the Euro pairs and I like the Australian pairs. Those are my favorite ones. You are very, very welcome. So we're going to wrap this up here right away. There's still quite a few questions. And again, there's 1,000 people here, just shy now because there are some people leaving the building. And the questions are still coming in. I'm trying to pick out the ones that are best suited for what we were discussing. I could go on all day about the other questions, about the psychology and things like that. And I can't tell you how sorry I am, how apologetic I am for not being able to get to every single question. There's just simply too many people in the webinar today. And I appreciate you being here. I really do. Thank you. Thank you very much. Lots of thank yous, lots of goodbyes. I appreciate everybody's time and attention. I appreciate the fact that you want to learn something here. Like, this is huge that this many people turned out. I am not just honored that I'm able to present something to you, but that you're willing to listen to what I have to say. It means a lot to me. And I'm going to be as forward and as honest, and I'll show you the nitty gritty as well as just the nice peachy trades too. It's really important that you see some of the drawdown, you know, some of the negative side. But we've got that covered because we have trade management on our side. And over the years, I have grown more and more respectful of trade management. It has become a key element in today's choppy market. If you can manage the trade, you're not going to win every trade, but a good trade management technique is really going to limit the blow. And you are going to not only survive, you are going to thrive in this kind of environment. We should indeed do webinars like this more often. Absolutely. I'm game. I am up for it. My schedule is busy, but if I can squeeze them in, I will squeeze them in as often as we can. And again, I know there were way too many people to get in. This is recorded. I hope that, I guess I'm talking to those that didn't get in. We'll try to get another one here so that we can do a one-on-one with some of the people that weren't able to get in. So that's going to be it for today. Thank you again so much for attending. This was a lot of fun for me. I hope you learned something today. I hope it makes sense and that you can take advantage of this. You see that it is a working, tradable system. And my ability to give back to the market, give back to the community a little bit is a great thing. Don't let the fact that it's free take away from the power of what it is here. Thank you very much. And you guys also have a great weekend. Check this out on the weekend. Take a look at some charts, see how this thing works. And you guys take care. And I hope to see you incredibly soon. Okay, guys, you take care, and we'll talk again soon. Bye-bye.